Wait till they.
All right, everybody. It's another week, another Ask Me Anything happy hour where we are here to answer your questions. The question is, do you have questions? Like, what do you want for Christmas? What is the elf bringing you? Have you been naughty or nice? Like, these are all great questions for this team. We are experts in the field of Santa Claus, angry elves, and anything that has to do with Christmas. So get your questions ready. We will be right back after this. All right, we are back, and I'm going to start in the upper left corner, upper middle corner with Steven, the angriest elf, and he is here to help answer any of your questions. Steven, what's happening?
Yeah, I'm just keeping my eye on all you naughty kids out there, reporting back to Santa, making sure that you're getting coal. If you haven't been good, you know who you are. But those of you that have been nice this year, you're going to be rewarded with lots of success, lots of money, lots of freedom, lots of control, and I love you.
You know, on that, I want to look up coal prices today because, you know, coal may not be such a bad idea. What is the price of coal? Coal index has the current level of coal at 181.48, down from 208.03 last month. So we're off the highs by almost $20. So coal may not be the best gift this year.
The dude wants to get rid of coal, so we'll see.
That's probably why it will become more and more valuable, because the dude is trying to get rid of all coal and all oil, not realizing you cannot run this country on green energy. Anyway, on to you, Joe.
Prosperous and a great 24 for everybody who listens to us and follows the system and keeps on growing and climbs the ladder.
Love it. I'd like to put a request into the elf. I would like a ton of coal dropped off at my house, because I think that would be a good investment for the future. Anyway, Hannah.
Yeah. Howdy, everyone. So, I don't know, not too much going on over here. So for Christmas, I'm hanging out with mom and dad on Christmas Eve. Mom actually put an assignment for all of us to write an article about what Christmas means to us. And at first, when I heard mom say, all right, you guys, you need to go write this article, I was like, mom, do we really have to do that? But after doing it, though, I'm happy that she put us on this journey to do it, because it made me have a deeper appreciation for Christmas, family time, the hibernation season, and things like that, which, in my opinion, I think we should be carrying throughout the entire year, not just the holiday season. But then on Christmas Day, I'm heading up to Idaho. A group of my friends, we're going out there. We're going to do snowmobiling and things like that. So I'm going to be traveling on Christmas Day. Never done that before with a commercial flight. So I'm kind of excited to see what the airports
commercial. What?
So that's what we're up to. What about you, Jason?
I will say real fast, I have officially now watched both Home Alone and Home Alone 2 this holiday season, an annual tradition, of course.
Actually, Stephen, let me tell you, for one of my girlfriend's birthdays up in Jacksonville, the Jax Orchestra did a show where they were playing behind the Home Alone movie. It was so cool. It was a really cool experience.
Yeah, that's awesome.
What's your favorite Christmas movie? Let's go around the horn. Start with Hannah. We'll go backwards. Hannah to Joe to Stephen to Chris.
I think I'm Home Alone 2 and Elf.
Elf. That's my favorite.
Home Alone 2, though, might be my actual favorite.
What's that one where it's Jack Frost? Jack Frost and...
Oh, that's the Santa Claus. The Santa Claus.
Yeah, I like that one.
Yeah, there's like 3 of them.
With Tim Allen?
That was with Tim Allen. Tim Allen, yeah.
Those are really good.
Yeah. We just watched, my favorite is National Lampoon's Christmas Vacation, but we just watched, what is it called? It was Tim Allen again. I don't know. Anyway, it'll come to me. I can't think of what the one was. It was really good.
Joe's is probably Bad Santa, right? That's your favorite one, Joe?
No, I actually, Ariana likes to watch all the Santa Clauses. 1, 2, 3, and the Escape Clause, and
those are good.
Yeah.
The other one's good with Arnold Schwarzenegger, where he's the action figure guy.
I never saw that one.
I haven't seen that one either, I don't think.
Oh my gosh, that's one of the best ones.
Mm.
Anyway,
I'm still waiting for Connor to watch Nightmare Before Christmas. He's not really into it.
Oh my gosh, Die Hard.
Jingle All the Way. If you haven't watched Jingle All the Way with Schwarzenegger, watch that one this holiday season. It's good.
Jingle All the Way.
Sounds like a good one.
There you go. Derek said he's in. Let's see. Gerard has said Die Hard. What do you guys think?
Well, luckily for everyone, my wife's not around today, so she wasn't home to stop me from doing what I did, putting this on. So I got a Hawaiian with Santa surfing shirt on with an actual tie and this hideous jacket all in one for you guys. So
greatest
she's with her family for the first time since 2005 celebrating Christmas, and I'll be joining her with my oldest son later this week. So
put a gun in my hand. I could kind of pull off that Bruce Willis look, I think, with that.
I'm thinking so, man. I'm definitely thinking so.
I was actually thinking you could pull off the elf look, man. You actually have the elf look going on. You look pretty clean cut. You look like you could be up to some trouble around the tree or whatever the elves are up to. You sent some pretty exciting elf photos in one of our chats. So
my son's Elf on the Shelf crashed an airplane into our tree the other night, actually.
Mine have been having an ongoing battle with Darth Vader with a Santa Claus hat on around the house. So it's been an ongoing battle.
Well,
All right.
While we're waiting for some questions to come in, I'm just going to go into Die Hard's famous quotes, because there are some good ones. So let's see what they're saying the famous quotes are. I think there was one, yippee-ki-yay.
You figured you should start there.
We'll start there. Oh, let's see. There's so many good ones. 10 best Die Hard Christmas quotes. Now I have a machine gun. Ho, ho, ho. That's perfect for New York. Dude, now I have a machine gun. Ha, ho, ho, ho. Yeah, not ha, ha, ha. Welcome to the party, pal. Let's see. Not a creature was stirring, even the 4 asses coming in the rear. Okay. Anyone remember these quotes?
Not that one.
Oh, man. Oh, man.
Ooh, the family's
All right.
watching. I just got some wows from my family. So that's good. We do have a question. Mr. Drew pointed out we do have a question from James. James is saying, hey, Chris, do you put a rider on the cash value to get both the cash and death benefit at death? Thanks.
Do you put a rider on the cash value to get both the cash value? So the cash value drives the death benefit up. So because it's actually the dividend option. So there's the way we build these is we put a big percentage of the premium deposit into the paid up additions rider. The paid up additions rider, think of it this way, buys almost like mini little whole life policies within the whole life. So it increases the cash value and increases the death benefit every time you put money into the paid up additions. So as the cash value goes up, the paid up additions also increases the death benefit. So it's like Christmas time. You get both without having to worry about one or the other. So if you put money into the paid up additions, your cash value goes up and your death benefit goes up. Yippee-ki-yay.
But when he asked that question, he said to get the cash value and the death benefit.
Joe, you like
And
talking
death.
about this one. Give the example of what you would do with the cash value and how that comes back.
Oh, you want that one?
Mm-hmm.
All right.
Please.
So you have $1 million in cash value, and you're doing as we say, and you're lending it out to an investment. So now every month you have income coming in interest. Say, I don't know, say $10,000 a month is coming in interest a month, and you graduate. Well, there's $2 million in death benefit on the policy, and you have $1 million loaned out from the general fund. So therefore, the insurance company says 2 million minus 1 million, you're getting $1 million to the beneficiary for the death benefit. However, that $1 million that you have lent out is still bringing in $10,000 a month in interest if you're alive or if you graduate. So then your beneficiary calls up after 6 months and says, I don't want to be a private money lender anymore. Can I have back my principal? Your beneficiary receives that $1 million from the investor. So now what did you get? $2 million, your full death benefit anyway. You like that, Jay?
That's really good. Well done.
And let me just speak from the technical side of it. So like all that it's happening is it's that paid up additions rider. All right. Sometimes y'all will hear us say PUA for short, paid up additions, but that's what's getting us those early years cash values out of the policy immediately. And that's why it's so important when you're designing a policy for the infinite banking concept. You know, you want to add on the paid up addition rider because that's what allows you to have the cash values in those early years. And let me actually speak on this because actually my brain's kind of going down this road. You know, sometimes folks will think that a whole life policy, you know, even if it's not designed for this concept, sometimes folks will think that whole life just never builds up any cash value, even if there's no paid up addition rider on the policy. And that's just not true because as time goes on, that base premium, that does start to kick that cash value in gear and you're able to pull that cash value out of the policy. It just takes a little bit more time if you're not overfunding the paid up additions rider. So just from a technical side of it.
Yeah, you would have loved today's wealth webinar where we went deep into one of my old New York life policies, which is 100% base. And we gave the returns on that policy 9 years in. And it's stellar, but it's all base, you know. So every time everybody wants to do a 90-10, like that's what you're giving up. You're literally giving up all that amazing growth in the later years. So it's got to be a balance between base and paid up additions.
It's all about the base.
And 100% base premium's not that bad, in my opinion.
If you don't need the early cash value.
Mm-hmm.
I just saw a policy the other day.
I got you, Carlos. Sorry, I saw that. How do I call it, Jason? I got you, Carlos. I'm texting you right now.
One of my clients, before he knew me, did a policy in his foundation for $1 million dump in $100,000 a year, 100% base, and that thing screams. It's 100% base, but because of the $1 million dump into the paid up additions, it front loaded it so much that there was really no other way because that's a 10-time rule that they hit with that. Yeah, that policy was a screamer. Let me tell you.
That's very good.
I mean, isn't that Craig, 14-year-old policy where he puts $1 in, he gets $5 or $6 back right now? Wasn't that regular?
Yeah, those are just regular 100% base policies. Yep. All right. What's the next question? What do we got? I don't know who's controlling it. We don't have Gabby or Shauna.
Probably me.
Good
The
job.
elf gets distracted.
Good job, Angry Elf.
Sean is asking, did we come up with a date for the Daytona Mastermind?
We're still in the works with it. Still in the works with it, but I'll let everybody know here soon.
Okay.
Hey, since we're talking about this, PSA, January 13th, it's a Saturday. Jonah, Dew, and myself, we're going to be co-hosting a millennial wealth building boot camp. Okay, so it's free to attend. If you go to themoneymultiplier.com/January 2024, or even go to our events calendar on the website, themoneymultiplier.com, you'll be able to see the event there and then register for your spot. So, and it's not just for millennials. The only reason I'm kind of targeting the millennial generation is because that's myself being Gen Z and Jonah being a millennial, you know, so we're going to kind of talk from that point, but anybody can come no matter what age group.
Cool.
I just put a video in the chat that I just did on YouTube all about millennials. And
What'd you learn? What'd you share? I'm curious. I've been having jokes in my head. So what'd you learn? What'd you share about millennials? What was the
Jokes
big?
in your head.
oh, you're just gonna have to watch the video.
Well, I will, but what you can break it down a little for us.
What did I learn? They're the microwave generation.
Spoiler.
I've done 2 videos on, well, one on millennials specifically, which is the one I just posted, but also one on all the generations, and both of them were super funny. I'll post the other one on all the generations. They're really funny videos. I'm always picking on millennials.
Well, I'll be speaking at the millennial event for Hannah. And do you guys consider me a millennial?
Are you? What is a millennial? How old
Are you a millennial?
No idea.
Let's find
I know
out.
I'm not.
No, you're not. You're too old.
Just like you.
Yes, sir.
I'll be 31 next month, January 15th. So
I bet you are.
81.
I always forget that you're so young.
81 to 96. So yes, Steven, you are a millennial.
I'll really be 41.
Yeah, that's what
What is
I
it?
thought.
81 to 96. I still
Wow.
think you fall in there.
I do
right?
fit in there. I'm 83.
That's crazy.
I think whoever
I would have believed you at
I think
31.
the dude
though.
came up with that. The dude's wrong, I think.
Yeah, dude's always wrong.
All right. Have $20,000 to start. Can I use that as a dump and then pay $10,000 a year, or does the $20,000 have to be split 10,000 dump, 10,000 first year premium?
No, you can do anything you want.
Yep.
Is that J Tenenbaum or just J10?
Yeah, we can do that. No problem.
Sure.
MRC said, yep.
Sorry, go. Oh, here, actually, yeah. Before you go into that question, Jay, here's another way to look at the policy too, though, real quick. You know, if you have in the back of your mind, all right, let's just take like a normal policy design, all right, and let's say it's a 20,000 a year and it's built as a 40-60 split between the base and the paid up additions. So what that means is that 20,000, 8 would go to the base, 12 would go to your paid up additions. So hear me out on this. What if you did structure an ongoing policy 20,000 a year? Because if you ever needed to, let's say you get to next year and let's say, Hannah, I just do not have this 20,000 right now. What are my options? Well, you can always lower that premium down to the base. So 8,000 a year would be that minimum to keep it alive and active. So if you're already thinking to yourself that, hey, I know I could do 10,000 each and every year, I could do 20,000. Now 20,000 is kind of making me feel a little uncomfortable, but if I tried really hard, I bet I could do it. I personally would maybe structure that thing with 20,000 yearly premiums, because then I know in the back of my mind, I can always reduce down those premiums to that 8,000. And then when my cash flow allows, I can pay back in up to that 20,000 in premium. So then number one, I'm not afraid to capitalize my policy. And then number two, I'm still able to push through this extra capital into that 20,000 a year premium. And I won't have to go out there and start more and more policies because, oh crap, I structured my first policy at 10,000 a year and I got more money that's inside of the bank right now, and I want to get it through my policies, but I can only do this 10,000 a year. So now I got to go in and open up another policy. So I don't know, just kind of play with those and with your long-term goals of what you're thinking about over there. But Jay, your mentor will be able to walk you through both of those policy designs and the pros and cons to them.
Hannah, don't you always say that you want to leave in something that's comfortable and the total should be a little uncomfortable to make you move the money?
Yes. Base should be comfortable. Your paid up addition should be uncomfortable.
There you go.
Maybe not so uncomfortable to take the cheese off your macaroni, but you want to put enough skin in the game. That's what we're trying to say. If you don't have enough skin in the game, then you will not focus on this and it'll just be another thing. Like how many people do you guys talk to say, oh, I have my money in an HSA and a 529 and then some in crypto and then some in real estate and some here. It's like, great. What if that was all together and you could use that all for those things?
Mm-hmm.
And then once the compounding happens, now we can add some lobster to that cheese with that macaroni.
There you go.
You do not want to be underutilized.
Lobster was repackaged and repurposed. That used to be one of the cheapest things that you could get. And then somebody decided at some time, hey, we should make
Well-
lobster expensive.
Yeah.
A lot more to that. There's not as many lobster anymore. There's demand. The amount of lobster that goes to China is unbelievable. But anyways, a lot more to that.
Was that on a WTF? That's something you guys researched that.
No, my good friend's a lobster diver.
There you go.
A commercial lobsterman. Yeah, he tells me all about the commercial fishing industry. It's an interesting one. All right.
I just posted the other video. Okay, Boomer. It took me a while to find it. It's called "It's Not Your Fault." Perfect name.
All right. MRC has a One America policy. First anniversaries today. Congratulations. I paid policy premium and loan interest. I noticed loan balance lessen. However, cash value of PUA did not reflect increase.
It could just be because the check hasn't processed yet. That's the only. It depends on when you made that first. First anniversary is today. A lot of times that's just because the PUA hasn't been posted to your account yet. I've seen that happen a couple of times. Hannah, you probably would have a better view.
Actually, no, that's the answer. That's it. Because sometimes it takes a little bit for the bank to communicate with the insurance companies. And the only reason the insurance company does that is just because they don't want you to go in there that next day, take out a loan, and then let's just make believe that, oh crap, the check bounced due to whatever reason. So now you got loan money that's not rightfully yours yet. So, and I'll tell you this, MRC. If you go into your bank account and that payment is posted, it's no longer in the pending. If you take a screenshot of your bank account and email it in to policy servicing, they will update it to reflect all of the changes. It'll quicken the process, I guess.
Cool.
You can always call policy services too if you ever have questions. Like I noticed today, I put in for a policy loan. So here's something. This is kind of a public service announcement. So it was One America. I put in for a loan about a week ago. And I was like, wow, this is taking way longer than it usually does. It's usually like 1 to 3 days. And so I just called to follow up and they're like, oh, well, it's over this amount. You need to fill out these 2 pages. And then they sent them to me. Right. So just if something doesn't seem like it was normal, you don't want to know, just call One America, tell them your policy service number, and they'll walk you through it really quickly. It took like 5 minutes to figure that out.
Cool. Gabby? Oh, no, Gabby? Gabby? There. Alexander said, I have an IBC policy. Is it possible to get another loan on top of the one I'm paying off?
Yeah, of course.
As long as you got cash in your policy loan.
Yeah, you can take multiple loans. Eve. Hi, Eve. Can you wait to pay the annual pay up additions when it comes due, or do you have to notify the company if you want to pay it a month or so later?
Depends on the company, really.
Yeah, my only advice is that just make sure you're paying the minimum. So minimum is $10 a month or 120 for the year. And as long as you pay that minimum, then you have that full year to make that paid up additions premium. So that's what I would do. Just make it by the due date, just those minimums, then you have the entire year to pay up the rest.
Cool. Let's see. Snippet loves it. Andrew says, nice hat, guys. Because they don't like you, Hannah. But ours are cool. Let's see. Edwin says, hey, Chris, currently doing velocity banking at this time to gain some cash flow and start a policy with you.
Fantastic.
Holla.
Awesome, Edwin.
How do I set up a call with Jason? Ooh.
Well, you're going to probably have to get in line because with that outfit he's got on, there's a long list of people.
Oh, yeah.
To talk
And
to.
it's all women.
All women.
Yeah, baby.
Hard work. It's hard work.
You want to let him know, Jason, how he schedules a call?
Yeah, I
with you?
just messaged him. I know Carlos from way back. Way
Very
back.
cool.
We go way back. So it's pretty cool. He found me here, though. I mean, we've lived in Orlando probably known him for 20 some years now.
Wow.
And so finding me here on the AMA is pretty cool.
That is awesome.
Looks like Chris's brother with that hat on.
Oh yeah, he's a smooth
Oh,
character.
yeah.
He's a smooth character.
Smoking that cigar, baby. All right. Kathy says,
Inhale though, no inhale.
QQ, I have about $800 in Robinhood and $30,000 with a previous employer stock pension with Fidelity. Can I do anything with your program with this little of an amount?
I would think, Stephen, with that, and you can talk more about it, but since there's an old 401k or, employer, some type of a qualified retirement plan through our employer, I would combine that. And I don't know if Robinhood's qualified or non-qualified, but I would do a self-directed IRA for the qualified funds. And if there's 800 in Robinhood, if it's just like a non-qualified, that definitely could go into the program.
Yeah. And actually join us for Hannah's mastermind. And that's actually what I'll be speaking on is qualified self-directing and how that kind of works with infinite banking. So, but yeah, Kathy, I mean, it kind of depends on your overall goal and plan and investment strategy and age. Some people might look at getting that 30K out of a qualified account. Like if you have massive debt, for instance, it might be worth, like I talked to a guy recently that had about that amount. And, but he was paying like 28 to 29% on like 20 some thousand in credit cards. And he didn't have the cash to pay the cards out. So it kind of made sense for him to pay the 10% penalty, get the money out of that qualified account, pay off those cards, get rid of that huge 29% interest, and then kind of start fresh. So there's a little more that goes into that, but you can kind of schedule a call with our team and talk through that with us though. But you can definitely have some options there for sure. Fair enough. Gerardus says, is there ever a point that you can borrow more than what you've paid into the policy?
Yeah. Usually around what, 12? You're 12?
Actually, a little bit
Sooner
sooner.
than that.
Yeah.
Depends.
Yeah. So
Between 8 and 12.
yeah. I say anywhere from year 8 to year 10. But I like your year 12 because I always like to under promise, over deliver. So let's go with year 12.
8 to 12. That's where the cumulative happens. But usually cash on cash is anywhere between 3 to 5. Sometimes 2.
Yeah, and then that's the important part. I mean, we hit that hard on Wealth Webinar at the end today, Chris, where the cumulative is, what'd you call it? Useless?
It's just not what you would look at when doing the infinite banking concept. It's what you'd look at if you're just putting money in the policy and leaving it sit, but that's not what we teach.
That's like an investment in a stock market. Oh,
Yeah.
will it go up and how long will it last? Blah, blah, blah. I can't use the money. That's not why we're doing this. That's not why everybody is here asking us questions, because they want to utilize the money. They want to move the money because money not in motion does not make money.
I think that's the easiest way when we're on our money mentor calls, right? When we're talking to someone, you can tell if someone, I had this conversation today with someone who's approved, ready to go, and kind of forgot about it. He's been running 100 miles an hour of investments. When people start coming in and talking about the cumulative and all, like when does it break even and those things, they're not thinking about this as a banker. They're not asking like, hey, I'm going to have money in my left hand and I'm going to have that same dollar working for me in my right hand. I'm going to earn money on this money. I'm going to make money on this money. Instead, they're thinking, oh, well, I just don't have access to all of it right away. I could go out and do another investment. If they're in that energy and in that, what they have those glasses on, investor glasses on, usually not going to bank, usually not going to get the concept because they haven't taken time to learn something new.
You're going to be on the financial hamster wheel their whole life, trying to chase those returns and never, ever getting where they want to be.
But here's the cool part is once you do hit that break even cash on cash or cumulative, however you do want to look at it, it never stops. And then it's just more and more and more exponentially, thank you to compounding interest every year until you die. And at that point, your family gets an exponential amount, even more tax-free. So once you get there, it's just all gravy, baby.
Hannah calls it that magic year we keep talking about, which is somewhere, for most people, somewhere between year 3 and 5. You put $1 in, you can take more than $1 out, and it just keeps getting bigger every year.
And people are really getting into me about the splits, about the 60-40, 70-30, 75-25. And I keep on telling them that really is only in effect for the first 24 months. Because usually in the third year, it's pennies to what you're leaving in the policy.
And usually about 90 cents of every dollar by year 3. no matter.
Yep, regardless if you do a 50-50 or a 90-10, don't matter. It's the first 24 months that matter the most.
Cool. Chris, here's one for you from Rich with Rich. Reminds me of Richmond, north of Richmond. But does Private Money Club work for Canadians? Is there a fee to join the club?
Yeah. So does it work for Canadians? Sure. I mean, it pretty much will work for anybody. I mean, the only issue you might have is if you're looking for Canadian deals. I don't know how many of those are going to be on there, but if you're Canadian looking to invest, in deals in the U.S., that would work really, really good. You could join if you're a lender. You could join a lender or a borrower. You could join for free. Just create a profile, do a free membership, and then if it's something you're serious about and you're looking to raise money or you really want to get into it, then you can become a premier member, and it's about $9.97 per year. And then what you'd want to do is just call 833-JOIN-PMC, and then they can kind of walk you through a demo. But certainly would work for Canadians.
Cool. Let's see. Yeah, I'm right there with you, Andy. All right. Brent says, Joe, what do you think about going over with the team? My wife Elizabeth's policy we're working on, given her lower rating, feel free to pass if not an interesting topic.
No, so this is for Hannah. So she was rated. So they're trying to find out a better way. I actually gave it to Craig, and he's going through to find out what is the best way to utilize like a rating system.
What was the table? What was the rating? Do you remember?
She wasn't making money until like 8, 9.
No, but was it B, C, D?
Yeah, I don't have to look it up.
Okay. I don't know the answer, but I know we can redesign. Like, this is an interesting one. I wanted to talk about this last week, but I didn't bring it up. So we designed something for max cash value with someone, right? It was a 75-25. It had a little bit of a dump in. And then when it came back as a table D rating, it had so much term on it as a 75-25. It made no sense. It was like 30 on a $10,000 a year policy. It ended up being like $3,600 a year. Mm-hmm. And so we redesigned it to be 56 to the base, 44 to the PUA, and it outperformed the 75-25. So when we tell you it's specially engineered, it's literally specially engineered and make sure you're getting what you need. Like, that's the point of this. So, and that one surprised me. Like, I had no idea that would work that way until we did it, right? So, I mean, Hannah can speak more to that because she has a lot of expertise in this area, but I thought that was super interesting and something to share, that sometimes the design is more base will get you more efficiency.
Especially on a rating. Term can be one of the worst things to have on a policy, especially on a rated case.
Yeah, just higher cost of the insurance. Yeah. And here's something else to take into consideration. I'm not saying that your health is or your wife's health is always going to be in that way, but there's actually an opportunity that you can go into an existing policy and submit for that rate to be updated or improved. And later on in the policy's life, you can always go back to the company. And let's say this was a tobacco user and, hey, I don't use tobacco products anymore. Can we update this health rating on my policy? You can always go back and ask for them to research it and consider that for you. I've had clients do that before, and the underwriters have given it to them. But something to just take into account for is that, I would just even take that offer that the insurance company is giving you, because God forbid if that health keeps declining, I mean, who knows in the future if you will ever even be considered for a policy moving forward, so kind of just weigh those pros and the cons. Also, there's even an opportunity where convertible term might make sense in this scenario. Okay. But actually, Jason, I like your comment about, hey, let's just go back and let's work with the illustrations and the policy designs and kind of see, hey, how is this performing? Because at the end of the day, yes, we're doing it to maximize the cash, but it's more so I want to have a place to store my capital, protect it, grow it tax-free, government's out of my hair, and then still have that leverage and liquidity to use the policy as time goes on too. So I don't know, a very layered question there. But that's why you're working with us over here, because this is all that we do. 100% infinite banking all day long, baby.
And I've had a lot of people, and Hannah, I love what you said, and you have tons of expertise in this, right? But I had a lot of people lately have table ratings and move forward because it's still part of the protection for the family. They can get approved now. And like you said, I actually have a question for you, Hannah. So I'll point over to you. Look at that. So with when you go back to retest, is there anything that you can't retest for? Like say someone's pre-diabetic and then that improves, or they're overweight, or they're tobacco users. Anything that you know of that you couldn't retest for? And like the time frame, is it usually 1 to 2 years? Do you know what the time frames are?
I say 1 year, 1 year at least. But no, I mean, really, I don't think anything's excluded.
So I've had people that have had like shouldn't have survived a surgery or shouldn't survive something,
Wow.
and then they did, and like it was to the point where the doctors are like, look at this aneurysm this guy survived. This is crazy. And then the insurance company, he got perfect health. He was really healthy, but the insurance company was like, I don't know, this is only 6 months ago. Let's wait another 6 months. And then he eventually got approved, table rated. But if we go another year from now, I'm sure that he could get an improved rating if he keeps showing there's no risk, keeps showing being healthy. So that's kind of where that question came from, just thinking through that.
It's a really good point. I mean, I think when people get rated and they don't take the policy, they're doing themselves a huge, usually that leads to them never being insurable again. If they just took the policy and they were able to improve their health, like you mentioned, like they can at least work on that later. I mean, yeah, it's a tough one.
I've had the opposite happen. I've had people not take the policy offer, not due to health or anything, but maybe something happened, or maybe it was a spouse and they just weren't on the same page with financials. And hey, no, we're just not going to start the policy now. They come back like 2 years later, health status change. They didn't get approved.
Yeah, I had that conversation earlier with someone Chris worked with. They had a ton of capital. They didn't really pay attention to the banking process, right? And then they ended up letting the contract go. Someone in New York, Chris. And then he came back. He ended up having cancer, can't get approved. And we ended up starting policies on his 3 or 4 kids.
But think about that. Like he could have got that policy, you know, even though it was rated, even if it was terribly rated. Now he's got cancer. Now he's pretty much done.
Oh, no, he was healthy when he got it. He was like standard or preferred. And then he ended up just letting it go because
I know it's even worse. It just makes me sad because, you know, like we never know when we're going to take our last breath. We never know when our last day is going to be. You just can't tell. So such a shame, you know, that door closed forever probably for that person. And if he does end up, you know, being taken down by cancer, I mean, his family, you know, number one has to grieve, but number two doesn't have the life insurance to help them live the lifestyle that they're used to.
Yeah, so we teach banking all the time, but it really comes from a family perspective for all of us here. Right. Like that's one thing where, or you have people on the other hand. I have someone, I've talked about this a few times, but it's always worth mentioning, who got table rated, went and lost a bunch of weight, gotten all his statistics, his blood pressure, everything was way better, and got standard rated the next one. And then so health is wealth. Like if this helps you improve your life to get healthier, then by all means, that's even just added cherry on top, another one. So.
What were you saying about that table rating? What were you talking about? Was it a D?
Yeah, the one that I recently had, yes.
That's what I get a D, 75-25. And you called it a 56?
So we did 56 to the base, 44 to the PUA.
All right.
And that made it more efficient for the first 9 years. And then with the 75-25, it actually outperformed it in year 11. But it was only like $1,300 a year going into it. So, I mean, it was an outperform with $1,300 versus being able to put $5,600 in. So, in year 11. So, overall for banking, that policy worked better.
Hey, something else just to talk on real quick too. You know, these insurance companies, I mean, they spend a lot of time, you know, reviewing these cases and doing their due diligence. I've actually had, I think it was only 1 or 2 people. This doesn't happen a lot, but I have 1 or 2 people where they've started the underwriting process and they never pulled the trigger, whether they got approved or they didn't get approved. And they did that, let's say 2 times. Well, then they come back the 3rd time wanting to get approved again with the same company. And they said, no, we offered you 2 policy offers. You never moved forward. So no, we don't want to do business with you. So you got to also take that time and respect of consideration with the insurance company of what they're doing over there as well.
Yeah, partners. You're partners. You're applying to be an owner in a mutually owned whole life dividend paying company, right? So, or dividend paying whole life company. So, be a good partner.
Yeah, exactly. Love that. All right, what else we got?
Angry Elf.
Would you start a policy to use to build a house? How would that look?
What's that one?
You know, I can hit on this one. I've got a lot of experience with this. I've had a lot of people that we've worked with set it up for that. So if you were going to use a policy to build a house, it's just like anything else. It'd be like buying a car, right? What you'd first do is, well, first you'd have to save enough money to build the house. But let's just say that that's taken care of. You front loaded a policy, you're ready, you got the money in there to build the house. The thing I would do if it were mine is I would literally go out and I would run an amortization schedule for a mortgage. Like just if I were to take a mortgage from a bank, and I would look at what the rates would be, and I would structure my mortgage to look exactly like the bank's mortgage and amortization schedule. I'd pay my policy back, my bank back at the exact same the same amount, the same amortization schedule as the bank actually would do, because I just think as if I'm a bank. So why would I do anything different than the bank? Which is really cool, because then once you think like the bank, if you did that to buy a house, or build a house, you're literally taking all that velocity of interest we always talk so down on about traditional mortgages, and you're reversing it. And now you're putting all that velocity in your control and also in your banking system. So mortgages have always been front loaded with interest. So you're going to put all the interest back into your private banking system early on in those first 7 years. I just think that's a fantastic idea. But if you just use the policy to buy the house and you're like, oh, it was my money in the first place, I'm not going to pay the mortgage back to my policy, then do not do that, because that's stealing from the bank. And last time I checked, if you went to Bank of America and tried robbing the bank, you go to jail. And if you went to Bank of America and you got a mortgage and you didn't pay the mortgage, they take your house. So think as if you're the bank.
So no more Billy the Kid dimes, right? No, can't do that anymore.
I guess not.
It's not a good.
It's just sorry, Jason. Those good old days are gone, man. We just, that shit was fun when we were kids. Robbing banks, man, that was good times, and we can't even get away with that stuff anymore. Freaking how times have changed. The dude has just messed it all up, man. Can't even freaking rob a bank with a gun anymore. I'm kidding.
That's Willie Sutton.
I was going to say, good thing Gabby's not here to say you're kidding. I got worried. I felt worried for a moment.
Oh my God. I when I was a kid, little story, I got a BB gun, just you watch that movie and they're like, I need a Red Ryder BB gun. And I'll never forget, I was a little boy and I would go out back and I would shoot at things. And, I started shooting at birds. And one day I hit a dove, and you never thought you were going to hit it. And I killed the dove, and I walked over and I saw the dove, and I looked up in the tree and the other dove was there. I didn't know doves mate for life. And my mom told me the story on how that dove will never find another partner and will grieve for the loss of this dove that I just killed for the rest of its life, and probably live a miserable, sad life. I literally gave my mom the BB gun that day, and I never touched a gun again until I was probably in my late teens or early 20s because of that moment. So, folks, I wasn't robbing banks with guns. I didn't even have a gun.
No, that reminds me of like Calvin and Hobbes. Like there's nothing worse, and you already felt guilty. You already knew that, that something happened, right, as a kid. And you walk in, your parents like, oh, Chris, they mate for life. That poor dove will never find it. I mean, just the
I'll never forget
that.
I'll never forget that. I'll never forget the feeling when my mom walked me over to see, the dove.
It broke my heart.
Yeah, it just destroyed me.
We got another question, Angry Elf.
What is the minimum to start a policy? Can I increase the policy later? Am I locked in? How does the loan work? And can I get a loan on the 10,000 or just what I put in each month?
That's a lot of questions. That's going to take us right to the end, I think. Let's go.
Fire rapid. Those are easy. Go.
What's the minimum? Well, I'm going to say something different than everyone else here, but most people say 10 times your age. So if you're 31, you could do 310 a month. I'm going to say it should be at least 10,000 a year or 833 a month, because you have to have enough skin in the game and you have to have leverage on whatever you're trying to solve. So we probably need to start with what you're trying to do to solve it. Then can you increase the later? No. Can you put 16 ounces into an 8-ounce glass? No, you cannot. So that'd be your second account that would be open in your bank on 3rd Street. What's the next one? The loan. How's the loan work? So you have different options. Like, would you agree that wealthy have more choices? If you answered yes in your head or said it out loud, then you can either pay it back in a structured way, which Chris does with all his loans. He immediately sets up a loan repayment. Or you can do what Brent does, and he just, gets a chunk of money back in and takes that large sum of money and pays it back at once. So that's unstructured. Or you could do what I'm doing currently and pay your simple interest at the end of the year, at the end of your anniversary date, so it doesn't eat the cash value, the growth. And then can I get a loan on 10K or what I put in each month? If you have cash value, you can take a loan. So it's depending on how much you put in. How is that, Snaggy? Fast? Good?
Was that just one question, or did you answer all of them with that?
I answered I went through all 5 of them because he said we were doing rapid fire.
Nice.
Then, just schedule a call. Jason@chrisnoggle.com.
We'll have that email address.
Or if you have a few hours time, Joseph@chrisnoggle.com.
There you go.
I'm Salty Texan Trucker says, I'm setting up a policy with Jason. My 19-year-old son is going to also. Gen Z getting on board. Love it.
That's fantastic.
Pansy's a Gen X.
I have an 18-year-old and a 19-year-old in the last 2 weeks, both who are super mature and, really disciplined already, not practicing regret. I was impressed. Super impressed. Good dadding out there, folks.
Yeah, good stuff, huh, Tony and Angie? Tony Stewart, race car driver? No. All right. The next 3 days coming up in probably March. I know that, to tell you the truth, but we'll do 4 of them next year, so hop on. They're good times. All right. I'm trying to understand the 1090 and 60/40 thing. We got a few good videos.
Yeah, Noggle needs to link his video. I have it. Here, hold on. I'll link it. Let's put it in the chat.
Okay. While you guys are doing that. Yeah, loving the campfire. Thank you. Thanks for being here. Okay, Boomer, Steven, where's your wall lobster? It's on the wall. It's in the wall in the other room. I actually got one for a friend for Christmas too. All right, inquiry. What is the minimum amount? Okay, we just talked about that. Which insurance companies are you doing this with? I'm on my phone, so I can't see.
I answered that one. I messaged that one.
Hey, I put the link in our chat. Will you put that in the public chat, please?
Yeah.
Yes, I got you.
You got that, Steven?
Yep.
Cool. Wow, that's awesome. Like 85 people right now on.
Wow.
A couple days before Christmas, and just great questions.
Well, since 85 people are on, I'll let you all know my address so you can send me Christmas gifts, okay? Just kidding.
Yeah,
I thought you were actually going to give your address. I'm like, oh boy.
Jason, Brian wants to know if we're going to start a tri club.
Definitely think we should. Definitely going to be doing some events, maybe ride across states, hiking up mountains. We do all kinds of stuff, Brian. So that's a good idea.
All right. We're talking about triathlete, right? Not a trisexual or you know what a trisexual is?
Come on, Angry Elf. Yes.
They told me they were trisexual. I said, what's a trisexual? They said, I'll try anything once. I said, fair enough.
Well, according to one of my buddies, he'll try anything twice. So I don't know.
All right. I'm sorry for the 86 people that are on. All right. Drew said, I really wish Lafayette's policy service operated the same as one in Mary. I will say about Lafayette, they're dumping a lot of money into their technology right now, and you're going to start seeing a lot of changes in 2024 with Lafayette. So we'll see what that actually looks like, but I'm told it's going to be really nice. So keep an eye out for that. Jersey Stomper, and I go way back. There you go.
That's me.
Oh, look, he changed his picture. He's got another cool hat on. Or is that a different guy?
No, that's him. That's him. He's a good dancer. I knew him from back in the swing dancing days, back Atlantic Dance and downtown Disney.
Oh, that's
Very cool.
fun.
Oh yeah.
Yeah.
That was a fun fact. No
That is
one
awesome.
probably knew that I once placed 5th place in American Lindy Hop Championships.
No.
And Faulkner
I would've
actually
never
likes
guessed.
Lafayette's website better than One America. So
And there was
And
5
I've had a lot
in
of
that
people say that
contest.
about Lafayette's website too, more than One America. One America is revamping their whole thing too.
yeah, that's right. That's right. Alan did say that.
Yeah, lots and lots.
Backlog on lofts. I'm assuming lifts. Has anybody talked to
Oh,
Arcangelo?
I have. I just closed on the building yesterday. I don't think there's a backlog. Joe, you're there every week. I mean, test driving your equipment. I mean, have you heard anything about a backlog? It should be good. Maybe just try reaching out to him again. I know there was a big backlog, and he was traveling a little bit, so he had told me, and this isn't yesterday, but he had told me before he got really far behind. And we just finished a new video, of me buying my second lift, and Joe did a testimonial, and Shauna did a testimonial, and Tina did a testimonial. It was pretty awesome. And we will be launching that one soon. So
I'm excited. I'm about to get in on the lifts. I'm just waiting for my money to hit Horizon. Schwab finally gave my money up. It took like 30 some days of going back and forth. I had a Schwab rollover IRA.
Usually Schwab's pretty easy with that stuff and makes it pretty easy, but I guess things have changed.
Not when it was in a, I'm trying to think what kind of account. Like it was managed for me. So like it couldn't, I don't know. It was a pain. It was a pain.
Wow. Andrew, you got Mike also looking to get in on the lifts. Christy Van's awesome. Thank you so much.
Christy is awesome. Awesome.
Does One America send anniversary statement reflecting interest and dividends earned for policy year? Which year do you start earning interest and dividends?
100%. I just got mine on my One America policy not long ago. They're cool because if you put them in I do everything in 3-ring binders, and One America is the only one that sends it on it's kind of like a tannish kind of cream looking paper. It's a little heavier cardstock. So it's real easy to find if you're a nerd like me saving paper. But their statements are really good.
Cool. In case you missed it, the market dropped the second half of the day today, like a
massive drop today.
Hey,
I'm not gonna say it, Steven, but I think we nailed it this morning.
Yeah.
Whoops. Okay. But how did those treasury bonds do? Sorry, just got to point the finger. Like, how'd your treasury bonds do when the whole market fell apart today? Pretty freaking cool, isn't it? When everybody else is complaining, when like things are falling apart and you're just making money, man. Yeah, you can learn a thing or two from these insurance companies. I'll tell you.
That's a cool picture of you. I've never seen that one with the cash and the hat. Look cool.
Oh, you talking to me?
Yeah, you. It just flashed up. I was reading all the comments on the below.
Oh, I didn't see it.
What?
Go back one.
Go back one.
Go back where one?
To the pansy sleep. That's been around for a while. Noggle had that as his profile picture for a while.
I hadn't seen it before. It looks cool.
I have no idea what you guys are talking about. All right.
Yeah, Alexander, we're always hiring. We just don't pay. Like, what I mean by that is there's no set paycheck. You earn what you make. I mean, once you solve people's problems, you start making money. The more people's problems you solve, the more money you make. Mm-hmm. But if you're just looking for a 9 to 5 to punch a clock and get a paycheck just for showing up, move along.
Whose condo?
Yours. I'm sure he's talking about your condo. Duh. You're the only one with the penthouse condo.
Carlos has been paying attention.
Yeah, for sure. He's like, condo, penthouse, I'm there.
I'm having a girls' night. When I get all moved in, I'm going to have a girls' night.
Well, you got to have a VIP party there for the Daytona event.
Seriously.
That's true. No, I don't know.
Yeah, you got to do that.
She's regretting saying anything about condo, new place, everything.
Glad you made it, Jet. Merry Christmas.
All right.
What else we got?
That's it. 5:33. We're good.
All right. Very cool. Well, we got through them all. We hang in there to make sure that all your questions get answered. So, folks, listen. This is the last Ask Me Anything before the holiday and before Christmas. So, I want to wish you all a Merry Christmas. I want to say thank you to all of our servicemen and women and all of our vets out there for keeping us safe and, just enduring the ultimate sacrifice for freedom. So, thank you to all of you. Thank you to all the first responders, and also want to give a quick shout out to Elon Musk. Thanks for being the leader, going out there and just doing the hard work and telling everybody else to just fuck off. So with that being said, Merry Christmas, Elon.
Merry Christmas.
Before we go,
Yippee-ki-yay, motherfuckers.
Chris, are we going to be back next week? Next week on the 27th?
We will.
Oh, yeah. We'll
Good.
be here.
We'll be here. Awesome. All right, folks. Thanks, everybody. Happy holidays. Merry Christmas. Stay safe. Don't drink too much eggnog. I hear that doesn't taste good on the way back up, and we will see you soon.